Heya Cryptozens, it's 10 p.m. Pacific time. The date is October 22nd, 2022. Welcome back to the Crypto Overnighter. My name is Nikodemus, and I'll be your host as we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. And tonight, it's weekend leftovers. And keep in mind, nothing in this show should ever be considered financial advice. Monday. South Koreans might see their citizens issue digital IDs as soon as 2024. Now, these would be blockchain-based instead of paper, and it's a sign of South Korea's continued adoption of blockchain technology. So, reportedly, this plan from the government means that South Koreans will have an app on their mobile phones. And this app will be their digital ID. It'll be used similarly to physical registration cards. 45 million South Koreans are expected to be onboarded to this program when it launches in 2024. One of their economists from the Korea's Science and Technology Policy Institute said that these IDs could be used in finance, healthcare, taxes, and transportation. Meanwhile, the Director General of the Digital Government Bureau said that this technology could benefit businesses that haven't made the switch to fully online. This could also mean that government is going to adopt a decentralized identity system. Now, that could make things interesting because it would mean that the government would have no insight into what information is stored on the phones, to include the digital ID itself, including when, how, and where it's used. And these advances should be of no surprise. According to the American think tank, the Pearland Institute, South Korea ranks first when it comes to implementing technology to benefit life, business, and government. Because this is not virgin territory for South Korea. They've already implemented blockchain digital ID systems before. In August of 2020, South Korea onboarded over 1 million drivers. They set up a blockchain-powered driver's license that works on Korea's Pass smartphone app. That was 2 years ago. Also 2 years ago, in September, the Korea Internet and Security Agency, or KISA, started their testing of a similar system. Report Linker is a market research firm, and they put out a report in July of 2021. That report states that the blockchain identity market is going to grow by over $3.5 billion by 2025. This means a compounded annual growth rate of 71%. Now, all that said, no matter how good the system is, no matter how decentralized it is, it still requires participation from both the government as well as corporate partners. Because if the government and the corporation doesn't recognize that blockchain IDs are a valid form of ID, then they're not going to be used effectively for most public services. So congratulations to South Korea for taking such an important step. Tuesday. Azuki is an anime-themed NFT project, and they have released something called a physical backed token, or PBT. This is an open source token standard that ties a physical item to a digital token. So Azuki shared this on their Twitter account that it was their first implementation of this token, and it will use the Bean chip. Now, this is a physical cryptographic chip. It generates an asymmetric key pair. In this combination, that of the PBT and the Bean chip, introduces a new feature. They're calling it, quote, scan to own. According to the team, quote, scanning the chip with your phone allows for the PBT to be minted or digitally transferred to the owner's wallet. This allows the current owner of a physical item to also own the PBT, which verifiably authenticates the item and ties the item to a digital token in the wallet of their choosing. So if you ever bought like sneakers and you wanted to make sure that you were buying valid sneakers, they weren't fakes or something, you might ask this guy to look at the PBT of his item. So this is a truly trustless authentication because Azuki intended to enable decentralized authentication and a tracking list of owners of physical items. This is all happening on-chain, no centralized authority, which means that no one authority gets to act as the gateway, as the authority for verification of the ownership of items. This is open source. That means anyone can authenticate, verify, or build on top of this technology. They're saying that users can build a collection that reflects both the digital and physical realities, as well as trading those authenticated items off-chain, knowing ownership information is being stored on-chain. Now, on the news, the Azuki project hit the #1 spot on OpenSea in terms of 24-hour trading volume. Wednesday, a new report from Fidelity Digital Assets takes a look at the difference between Bitcoin and fiat currency. And they said that Bitcoin's future may stand, quote, in stark contrast to the rest of the world. So they put out this report called The Rising Dollar in Bitcoin, and it draws something of a line between Bitcoin and traditional currencies. This report is something of a reaffirmation of Fidelity's faith in Bitcoin as a whole, despite the bear market. And so they took a look at how far Bitcoin has strayed from what it was originally considered the norm. In an era that sees money printer go burr and rampant inflation, Bitcoin's fixed supply and regulated issuance are particularly important. They said, quote, Bitcoin may soon stand in stark contrast to the path that the rest of the world and fiat currencies may take, namely the path of increased supply, additional currency creation, and central bank balance sheet expansion. And while Fidelity put the US dollar on full display in the title, the report does place importance in the relative strength of the US dollar to fiat currencies. However, this report also spends a good amount of time looking at what happened with the British pound. They basically pointed toward that crisis and said Bitcoin fixes this, and that this couldn't happen on a Bitcoin standard. Now, as far as their forecast goes, they said, quote, more monetary debasement may be needed to alleviate the high debt load among developed economies. And while recent events in the United Kingdom have shown counterparty and liability risks in the system, making monetary intervention and doses of liquidity features are not likely to go away anytime soon. Which all sounds horrible to me. They concluded with, comparatively, Bitcoin remains one of the few assets that does not correspond to another person's liability, has no counterparty risk, and has a supply schedule that cannot be changed. Whether those properties begin to look more attractive is ultimately up to investors and the market to decide. In their report, Fidelity points out that this month, the illiquid supply of Bitcoin should hit a 10-year record. Meanwhile, Glassnode has indicated some rough sailing ahead as far as Bitcoin volatility goes. Quote, the Bitcoin market is primed for volatility, with both realized and options implied volatility falling to historical lows. Thursday, Kraken joins the list of crypto firms shutting their doors on Russian users. Now, this should surprise no one, because even though he's no longer CEO, it wasn't all that long ago that Jesse Powell warned Kraken's users about the risks of keeping your crypto on a centralized exchange, as have I. So what happened is, yesterday, Kraken sent out an email to all their Russian users, and in that email, they said that they were shutting down services to those Russian customers. They said, quote, due to the new European legislation, we have to take measures to restrict your Kraken account. We will update our support center if there are any changes. We apologize for the inconvenience caused. Now, reportedly, Russian users will be able to withdraw their funds by request. Now, that said, I don't know what the timeline is like on that one. A Kraken spokesperson said that they were making sure that they were in compliance with the legal and regulatory requirements for all the jurisdictions that they work in. They said, quote, since the EU's announcement, we have been working to make the changes needed to comply with the latest package of sanctions against Russia. Now, this isn't the first time that talking about something like this has happened to Kraken. Because remember the trucker convoy in February of this year? Powell spoke up back then because Canadian authorities froze crypto wallets that were funding the protesters in the truckers' convoy, and he condemned those actions by the Canadian government at that time. But he also warned people that the same thing could happen at Kraken if the regulators require it. His suggestion is to get your money off the exchanges. He said, quote, if you're worried about it, don't keep your funds with any centralized or regulated custodian. We cannot protect you. And that's not the only time he's spoken on the subject. back when Ukraine asked all the exchanges to block Russian users, he refused, saying that he wouldn't do that unless he were forced to do so. Well, now the company has been forced to do so, based on the latest round of EU sanctions against Russia. They join blockchain.com, crypto.com, and LocalBits in denying services to Russian users. Now, Bitfinex, they were also against banning non-sanctioned Russians. However, it looks like they've been forced to bend the knee as well. A representative said, quote, "We comply with all the regulations under which we are bound and are monitoring this situation closely." Now, we've talked about this, the 8th round of sanctions against Russia. This round saw a blanket ban of any crypto transactions between EU-registered companies and Russian users, regardless of the amount of that transaction. Friday. Interpol is ready to start walking the beat in the metaverse. The International Police Organization is gearing up to crack down on an expanding list of potential crimes in the metaverse. So they put out an announcement on October 20th. And in this announcement, they said Interpol launched, quote, "the first ever metaverse specifically designed for law enforcement worldwide." This was announced at the 90th Interpol General Assembly in New Delhi, India, and it is already functional. What Interpol said was one of the big reasons that they're getting into the metaverse is because the bad guys are already there. They're already using the metaverse to commit crimes. And the fact that public adoption is expected to increase greatly over the next few years. The announcement said, quote, "Criminals are already starting to exploit the metaverse. The World Economic Forum has warned that social engineering scams, violent extremism, and misinformation could be particular challenges." It continued with, "As the number of metaverse users grows and technology further develops, the use of possible crimes will only expand to include crimes against children, data theft, money laundering, financial fraud, counterfeiting, ransomware, phishing, and sexual assault and harassment." Now, unfortunately, these crimes are not just theory. Last month, a South Korean man was sentenced to 4 years in prison. He was sexually harassing children, trying to get them to send him obscene pictures and photos. Now, in addition to their own metaverse, Interpol also announced a new division. This division is dedicated to solving crypto-related crimes. Jürgen Stock is Interpol's Secretary General, and according to him, there's a need for this specialized unit. That's because most law enforcement agencies just aren't set up to deal with the complexities of digital assets. So not only is this Interpol metaverse there for law enforcement purposes, they're also open to visitors. So you'll be able to take a tour through a virtual version of Interpol's General Secretariat HQ in Lyon, France. Additionally, they'll be teaching forensics investigation courses. So Interpol's hope here is that this new capability provides a much more efficient way for global law enforcement agencies to cooperate and communicate, as well as providing training and education for new recruits. So thank you for joining us for another episode of Weekend Leftovers. I want to thank you, my listeners, because when you stop listening, I will stop talking. Have a good night.